Good morning. It is Tuesday morning, and we just had a pretty rough Monday in the markets. And I'm not going to say, hey, I said this was going to happen, but you know what? I did. And what is happening has nothing to do with the Fed and its tapering. You're going to hear reporters say this over and over again, and it doesn't make any sense in any way, shape, or form, but you'll hear it repeated. So it'll make you start to believe that somehow the Fed tapering has some relationship to earnings and the stock market, and it never has. But the more you hear it, the more you believe it. So part of this is to explain to you that that is not the case. What is the case, as you see here on the cover of CNBC, are a couple of things. You do see that the economy is slow, but the world economy is really ugly. And so the U.S. economy is slow, the world economy is ugly. And why that matters to earnings in the U.S. is that most of our companies' growth expectations come from business that they're going to do outside of the U.S. They're not really seeing a lot of growth in the United States. Almost every company that you talk to, they're talking about their expansion plans outside the U.S. So if you're an owner of a business, you're doing the same thing. You're thinking, how do I get more business out of Latin America? How do I get business out of China? And a little bit out of Europe. So when these economies slow, it impacts the potential earnings for our companies that are on the S&P 500. And as a result of that, we see stocks start to pull back. So with that in mind, you can see down here a story, strong earnings fail to impress. Well, that's true, because it's what they're going to do next is what's concerning. So they reported numbers based on the fourth quarter. The question is, what's going to happen in the future? And I've always said that stocks move 6 to 9 months ahead of earnings and economic data. So they're moving now based on where they think things are going to go. Another thing that's happening, there's two ways to value stocks. There is fundamental analysis, which has to do with their earnings, their balance sheet, really any kind of numbers like that. And then there's this wonky thing that I've always disliked, and that's called technical analysis. I don't like it because it's all about analyzing the previous chart patterns of stock price movement. I think I said that right. So if it forms some sort of shape, that means that if it breaks down below a certain level, that you're going to see more selling. Computer-generated programs or computer selling and buying follows this. Well, there's a lot of computer-generated buying and selling in the marketplace these days. So that actually is what's driving this market. So when you see these ferocious sell-offs, these big swings, it's all computers. It's not individuals like you and like me that are moving the market. And when you hear somebody, I love this, when you hear people on television say, people are scared, okay? Not true. Apparently it just changed. People aren't walking around even if they are scared, they're not moving the markets. There's not one person watching this right now that's moving the market. It is a collective group of computer-generated selling that's doing that. I promise you that. I've been there. I know it. All right. So, what do I think is going to happen? Right now, the technicians have taken over. The computers have taken over the stock market. So we can read all of these stories. You can hear all of this analysis. The reality is this guy right down here, ugly correction coming. Now, Dennis Gartman, I've been on television with him before. He's a pretty good guy. And what he's writing here has a lot to do with the technical analysis. And what he's seeing is, you know what? There's not a lot of reasons we're going to see buying coming up anytime soon. And I don't disagree with him. Okay? Sorry, I turned that on. I don't completely disagree with him. So this isn't a time to enter the market. We're in the market. We've got some non-correlated assets. We need more. And I don't see this thing reversing anytime quickly. So, good morning. All right. Want to just explain that to you.